Hello everyone, my name is Robert Covell, and this is my free stock guide. I wanted to make a platform that was free and can potentially help you with your stock trading. This helps for me personally. If it doesn't work for you, don't use it at all. But for me, I've had a decent amount of success in my 6 years of stock trading by using this method. At first, I started off rocky. It was very unorganized, didn't really have a genuine plan. But I compiled all these tools together and correlation report to see what really works, what doesn't. And yeah, I just made this whole presentation to kind of sum up my method of doing it. So this is all free. My program is completely free. I'm only running off donations. So if it works for you, a donation is greatly appreciated. But I don't want people to just be buying stuff that's kind of sketchy. For like stocks, you need for stocks it's kind of sketchy. You need like a sort of a following if you want to make your point clear. You need that sense of credibility, such as like Warren Buffett, who's shown his success and shown his brilliant trades. So for me, I don't really have that right now. I'm just starting out. So any amount of support to finance like future videos, future techniques that I can better describe is greatly appreciated. But yeah, this is just me giving my advice for free and hopefully influencing somebody to be like a better, smarter, more organized trader. Because I made some mistakes in the past that I reminisce on and just think, wow, why didn't I have like that same agenda, that same plan. But yeah, so this is essentially my stock guide. So let's get right into it. Okay, so first, this is my correlation report. I basically have about I'd say like 60, 70 reports so far. But this is just an example on Win Resorts. Basically, what I do is the whole thing is essentially a scale. As you can see at the top, it has like that rating bar, and what goes down the list are like sort of like the tools like earnings, low PE ratio, market dip, dividend value, etc. And I grade it on a scale worst, average, or best by looking at the data to get a more concise and clear estimate. Like if I go back on a stock that's like from a year ago or something like that, and I want to see like what I did, I need to know exactly what my mindset was in investing in that. I can't just say average or best in certain categories because that's a little bit vague. So what I like to do is I put like a little description. So for instance, if it says industry high and I put average, as you can see there, it's in the middle of the screen. I write a brief description, like I say somewhat, like maybe it wasn't exactly in the middle, but maybe more towards the top. You're going to want to put that information there so you really get to know your mindset and your method of trading as to why you did it. That really gets you to understand, it really gets you to recollect on why you invested in that stock and the outcome of it. As seen on the bottom, it shows the total score tallied up. Each check represents 1 point for worst, 2 points for average, and 3 points for best. And I got a 30 out of 42 on that. That is in the above average range, more on the higher end. So this was a win from that. Uh, I usually sell a stock within the 3 to 5% range. I don't really follow stock after I sell it, so maybe I, sold too quickly. Maybe I sold perhaps too late if it were to go up before I sold it. But essentially, that's when that works for me personally. So maybe I'm wrong. Maybe I should be holding it a little bit longer, but this is what works for me. And unless I'm corrected on that, then I'm gonna keep doing what I do. So just to sum it up, I don't want to take too long on this, but I'm gonna go over the stuff that's mainly harder to like tackle. Like for instance, for industry high, you can look that up on your own, whether you're a new trader or not. Um, Trivial stuff, fundamental stuff like that, you can just look up on your own. But I just want to tackle the stuff that's like more fundamental and more important in terms of your trading. Okay, so first we have earnings. You really want to make sure that earnings don't plummet. Obviously, it's all sort of common sense when it comes to earnings, but make sure that it sort of has some type of growth. So in case you get stuck in the stock and some bad news happens or whatever the case may be, you still have that kind of safety net that you want to have that ensures that okay, it might not be too bad or maybe I can actually get a gain off this. So what I like to do is, as you can see, the first quarter, it says quarter three, it barely beat the earnings, but it has this history of the blue bar is the actual adjustments, right? And the sort of grayish white bar is the estimates. As you can see, it typically beats their earnings, but it has this sort of pattern. It does beat, miss, beat, 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 miss, beat, beat. So you can expect the next one to be a beat, but don't go off that just because it has that sort of pattern. I would only use the pattern if it has a very clean cut, solid pattern, such as it always beats its earnings, or if it's a beat, miss, beat, miss, beat, miss. If it's that, then you can expect the next earnings to be whatever the last earnings was, the opposite, if that makes sense. Um, so yeah, uh, look for patterns, but if the pattern isn't there, then what I do is I check what typically happens, what the company has in its history. If it typically misses their earnings, I don't typically like the stock. It really depends on how much they miss it by. But yeah, that's my mindset in terms of investing. The next thing I like to go over is P ratio. I typically look within the 10 to 20 range. As you can see, this is Disney for an example. This is in the 14 range, so I like it. Equity summary score, I go off the platform Fidelity. Uh, Maybe some of you investors who have been doing this for a while have E-Trade or something like that, but I just use Fidelity. I'm not sure what tools they have on E-Trade or whatever the platform may be, but this is Fidelity. Um, I look for anything above the 7.1 to 10 range. Sorry. And yeah, so if it's average, if it's in the 5 to 7 range, I typically, if I want to invest in that stock, I look for other things like technical analysis, P ratio, dividend, if if it's average, like something else that I can use to make me believe like, okay, this might be a decent stock, if that makes sense. Next one, this is the site TradingView. This is going to be really hard to tackle because it's very complicated to explain. But basically, the diagrams to the right, you basically correlate the bars with everything you see above. You want to look for a thing called the golden cross. If you see in the middle section, you have the red line, which is the signal, and the MACD, which is the blue line. You want to make sure the blue line goes almost completely up, and the horizontal line, the red line, goes horizontal. Um, what that makes essentially is the golden cross, which is one of the most bullish signals in the stock market, and that's going to be your message for short squeezes, and really just to make a quick gain. This helps for me personally. Again, I don't know if it'll help for you if you're like a long-term investor, but I typically do short-term trades anywhere from 2 weeks to a couple months. Nothing too long, but yeah, that's my form of investing. If wherever I post this, I might do like a quick description, like um, explaining how this is done, or just make a totally separate video. But yeah, that's basically how it's done. I can list the indicators as well. I'll definitely do that. So this is on TradingView.com. Really helpful site, if not like the most important tool that I can recommend in terms of stock trading. Next up, we have dividend yield. So when I made these, when I researched the dividends, the average was 2.22%. I'm not exactly sure how accurate Fidelity is. They say the market median is 2.32%, but it's in the same range. No biggie, nothing like too nothing too off the scale. Disney has a 1.58% dividend, so that would rank in the average category, as you can see at the top. So I would give that rating a 2. This all correlates back to the correlation report. So just tally up everything you see here back to the report. And I would recommend, it's out of 42 points, I would recommend anything above 32. 32 is still, I believe, in the average-ish range. But what helped for me and what I've seen is anything above a 32 is almost a guaranteed success. I've like had maybe 1 or 2 losses out of 70 when it was over 32. So I think my total success rate so far is like 88%. To be fair, last year in 2017, it was a really good year for the market, so that's probably what boosted it. So realistically, I put my success around maybe 65 to 70%, but I wouldn't consider that too bad. It's definitely better than just guessing. It's definitely better than listening to what the media might say and just going off that. So I feel like for me at least, this is like a clear, concise, strategic way in terms of investing. Remember, if it doesn't work for you, don't bother with it. But I invest in blue chip stocks. I'm a short-term trader, so if that correlates with what you do, then go for it. And lastly, sorry, we have risk rating. I don't typically use this that much, but I definitely factor it into the correlation report. I don't know if it actually does help because I've seen this go all over the place. Like I've had it where it's worst, and I still get wins out of it. I've had it when it's best, and I still get losses out of it. So it's kind of all over the place. So I'm not exactly sure if this works, but I always try to just keep using it to see, okay, maybe there's some advantage in using this. And if there's not, I won't use it entirely. Again, the correlation report takes a long time. It takes a lot of data. You need a big sample size if you want to get an accurate, representation of whether this tool works or not. So yeah, if it's like, for instance, like if it's a 4, and you don't know whether to rank that average or best in terms of the scoring, I would rank it probably best depending on how good the other data is. And or you can rank it average. It doesn't particularly matter that much. Or you can just like give it a half point. Either or, that works. Or just like list it in like a brief description as to why you chose that. So that's the end of my presentation. I hope you guys enjoyed. If you have any questions, I'll put my email in the description. And if this method works for you, I really appreciate donations. Again, this is entirely free. I'm just trying to help people out, and hopefully this can finance like future videos or tutorials and stuff of that nature. But thank you for watching. My name is Robert Covell, and I'll see you next time.